Hello traders. In the previous video, I shared some unsettling facts about trading. Specifically, I mentioned two things that traders tend to do which can lead to failure. Firstly, traders tend to hold on to losing trades and sell their winning ones too soon. Secondly, when there is a gap between a trader's goals and their current situation, they often make risky trades in an attempt to bridge that gap. In today's video, I will explain why traders often fail and how these two behaviors contribute to failure. It's all a question of balance. We as traders use the concept of balance and imbalance to profit from price fluctuations. But the market maker, he uses imbalance too because he creates an emotional imbalance in your psyche, in your inner being, in order to make you make the wrong decisions. And I will explain everything. But first, let me begin with Sun Tzu, with the art of war. And it goes as follows. If you know the enemy and know yourself, you need not fear the result of 100 battles. If you know yourself but not the enemy, for every victory gained, you will also suffer a defeat. You will succumb in every battle if you know neither the enemy nor yourself. And the question is, who is the enemy? And why do traders fail? According to Mark Douglas, who wrote an amazing book called Trading in the Zone, the trading profession is unique in that individuals who may be highly successful in other professions may fail in trading. And this is due to the differing perspectives, attitudes, and principles that have opposing effects in trading versus other walks of life. The first issue I would like to discuss today is risk, because trading involves inherent risks. As traders, we must understand that placing a trade means dealing with probabilities rather than certainties. However, if we lack a trader's mindset, two issues may arise. The first issue is that some traders they struggle to accept the risks involved internally, and the emotional distress caused by losing a trade or even the mere possibility of losing a trade can cloud their judgment and lead them to cut the trade too early or to hold on to a trade too long. The second part of this imbalance is traders that simply apply no risk management at all. And they are going for all the marbles in every trade. Why? Probably because of impatience or because there is a big divide between their current situation and where they want to be. And this divide it's like a shit sitting on their shoulders and compelling them to take risks. Why? Because they want to make it. They want to be rich. Maybe their friends, their colleagues, their family is better off than them, or there could be a million reasons. But these reasons compel or create this kind of behavior among traders that they go with too much leverage. They take trades without a plan, without risk management, all in an attempt to make in one trade or in 1 month or in 1 year what could otherwise could take 10. And this cavalier attitude towards risk is simply leading you to blow up your account. So you need to be balanced as far as risk goes. Meaning, first, when you place a trade, you need to internally think as if this trade is already lost. You need to accept that risk. And your position size should be accordingly, meaning that for one person, $30 is a lot of money. So this is the maximum amount that you should lose or you could lose on this trade. For another person, it's 300. For another person, it's 3,000. It doesn't matter. The issue is that if you lose this trade, life should go on for you as if nothing happened. If this is not the case, then your position size is too big and you need to reduce your position size. Okay? That's risk. Second issue is attitude, bias. Have you ever heard about the term the Link Marines or the XRP Army? What is this? This is a construct that marketers created to create a false sense of belonging and community to people that otherwise have nothing in common. And the purpose of these marketers is simply to make you hold on to your trade, to your investment out of sentiment, which has no place. In trading, you shouldn't have any sentiment towards any asset whatsoever, okay? It's all a trade. If it goes your way, fine. If it doesn't go your way, you just cut it, okay? This is the first issue that relates to bias and attitude. The second is that sometimes our bias towards an asset or towards the market colors our analysis as TAs, as technical analysts, and as traders. Meaning that if you have a bias about the market, then you are not objective and you will not make good trades. I personally know a trader that is shorting Bitcoin now from 28K until now. He's just shorting and shorting and shorting. And I shouldn't say it, but of course he got completely and utterly wrecked. Why is that? It's bias and attitude. You need to look at the market objectively, at an asset objectively. It has to serve a purpose. You don't feel emotional attachment towards a screwdriver, right? Or towards a car, even a car. It's an object. It serves a purpose. The same way you should look at the market and the same way you should look at different assets that you trade. None of them is special, okay? You don't belong to a community. And the market is what it is. You're not bearish about the market and you shouldn't be bullish about the market. You just trade what you see. And in the event that the situation is not clear, that you don't know where things are going, remember, you don't have to do anything. You don't have to trade, okay? If you are unsure about the market or about one asset or another, just leave it be and move on, okay? Next issue. The third issue is proactivity. Successful people in most fields tend to be proactive and take a hands-on approach. If you are a farmer, you get up in the morning before the sunshine, you go out to the field, you work in the field all day. At the end of the season, you will affect the outcome and you will have a better harvest. Or if you are working somewhere else, it's the same. The harder you work, the better your reward will be. But it doesn't go like this in trading. In trading, your job is just to identify an opportunity. And once you have identified an opportunity and placed the trade, that's it, it's over for you. You cannot even affect the outcome of your trade. You are just a bystander. You are watching the trade as it unfolds. And not everyone is fit for this kind of a job, of a profession, okay? Because you feel helpless. Many times you are helpless. And you need to think about that, and you need to think if this is the right uh, job description, if it fits your character. The last issue is tenacity. Tenacity is an important trait for a trader as well, because I think that as a trader, especially in the beginning, you fail more often than not, and you need to get up and try again and try again and try again. However, as I mentioned, there is the balance and imbalance. The imbalance in trading is when your tenacity makes you repeat the same behaviors and the same patterns that caused you a loss in the previous trade, and you take the same pattern, the same behavior, the same bias, the same attitude, and you apply it again and again and again. And in such an outcome, your tenacity could be your downfall, and you should think about that, okay? Boldness or decisiveness is an important aspect of decision making. And from a young age, we are often taught to appreciate bold and decisive action. We believe that any plan is better than no plan, and we are expected to act when faced with ambiguity and lack of clarity. However, while this approach may be useful in certain situations, it is not necessarily effective in trading. In fact, in trading, such behavior can lead to disastrous outcomes. You need to be bold when it's time to be bold. When you have identified an opportunity, you need to trust yourself. You need to trust your TA and execute the trade. Then you need to be bold. But if you don't have clarity, if you don't know what's going on in the market or with this asset or that asset, then you don't just do something. You don't do anything. And it's not easy. It's easier to do something, but that's not the way it works in trading. In trading, if you don't have clarity, then you simply don't do anything. To summarize, in the trading profession, it is crucial to maintain balance. Having tenacity, boldness, decisiveness, and other positive traits are commendable, but it's equally important to apply these qualities judiciously. The best way to serve yourself is, as Sun Tzu put it, to know yourself and to know your enemy, and always be mindful not to become your own enemy. That's it for today and for this video. Thank you very much for taking the time to listen. And please, if you have something you want to share or comment, then by all means put it in the comments, or if you like, send me an email, and I will see you in the next video.